I remember during 2021, Curve was like one of the undisputed TVA leaders.
Curve has been a high success back then, and like one of the only venues. And that's the intention of it. It has been the intention to attract a lot of liquidity, and the tokenomics have been structured to do this, and it worked very well. And now, it's not the same situation. There's much more competition, basically.
I covered Llamalend several times before, and especially its soft liquidation mechanism. Do you think there are any similarities between that and Refuel?
I think there are really different products at the end. Liquidation protection, as we call it now, is much more close to the Uniswap V3 world, in the sense that you have like bands of liquidity which are filled, basically. But it's more like take the experience and iterate on this, as we did now with FXSwap.
Do you believe that FXSwap will help Curve?
There are two answers to this. The first,
So maybe at first, for like those that watch and aren't that familiar with Curve, maybe like a short introduction of like Curve and its importance in the DeFi world in the last few years, I guess.
Yeah. So basically, Curve, or the founder of Curve, invented many things in the AMM space, who is all about on-chain liquidity, basically. And historically, markets had on-chain had like a bootstrapping issues, and the AMM was like the answer. And then Uniswap, like full range AMMs like Uniswap have been the first iteration, basically. But this had problems, and with like liquidity, basically was not like very dense. So the founder, Michael Egeroff, he invented basically StableSwap. It's called StableSwap now, and it's an algo who basically was able to have a more concentrated liquidity than full range AMM, basically. And I think it was like the first of his kind, and he was very early with this. And so Curve basically found a product market fit instantly with stable assets, basically, with most of the time stable dollar pairs, but nowadays also like ETH derivatives and ETH and other like wrapped bitcoins who are like stable, have stable price all the time, basically. So this is the basic origin of this. And then Curve has been during the DeFi summer, Curve has been one of the main venue for many liquidity pools. Basically, there was also like an iteration of this who has been for unstable pools. The name is, we call it CryptoSwap. This was called CryptoSwap, still is, basically. And now we just did an iteration on this one and have a new version of our AMM who is called FXSwap, but it's very good for low volatile pair, basically. But to wrap this up, Curve is much more than just an AMM. Today we also have like our own stablecoin, Curve USD, basically, who is a CDP stablecoin which you can mint out of some assets like wrapped Bitcoin or Bitcoin and ETH, basically. And we also have a lending market who is like using the same technology as the stablecoin, basically, which is the innovation part of it is like liquidation protection, we call it now, basically. Yeah. So.
Yeah. Okay. Yeah. Thanks a lot.
This is a good intro.
Yes. Yes, it is. Great. And so, I guess maybe to focus more on FXSwap. So what do you think was the main reason that motivated its development? Like, was there a specific, let's say, thing in FX trading or in low volatility markets that you thought Curve was able to best solve?
Yes, basically, it's also low volatile pairs now. It's also Bitcoin and ETH, basically. It's also counts as low volatile pairs, basically. And the issue, but if you look at the iteration of AMMs, if you have like Uniswap V3, if you have ticks, basically you have to manage your ticks all the time. And this is not very like liquidity provider friendly. What we did see is that I did liquidity provide for Uniswap V3 because V2 for full range AMM because it's easy. But as soon as you have to manage your position, you have to work for this, and it's not hard to. It's like you have to manage your position all the time, basically. So Curve is still convinced that basically in a way, liquidity which is just pooled, basically. So every liquidity in a Curve AMM has the same spot, basically, which is not the case in Uniswap V3, basically. So this is the thing we try to solve over the last few years. And the thing is, if you now it's a little bit technical, but if you reposition your liquidity, if the pool is in imbalance, basically, if you reposition your liquidity, you create always like divergence loss or impermanent loss, and it's real impermanent loss. It's not that. Basically, this means if you have your ticks somewhere, you have your own position, you have an NFT, and then the trading, when the liquidity is out of range, you have to reset your liquidity. And at this time, you're losing part of your value of the asset. And if you shift it back, it's real loss. So this means even if the price going back to exactly the same price, so if you have a ETH/USD pool, basically as soon as you shift it and you shift it back, you create loss. And this is somehow like gravity for AMM. You can't get rid of this in a way. But there's a trick, and we did it with FX basically now. So even we had in the iteration we had before on CryptoSwap, if the liquidity basically was out of range, it shifted itself to the right point basically, and it did it quite well. But on some occasion, it didn't work that well. So the iteration basically is we have been able to take out the liquidity. We have been able to take out the impermanent loss basically outside of the box. So the new FXSwap, what it allows is a separation between liquidity providing, and like the divergence loss or impermanent loss generating part. So we call it refueling, what you can do so that you're always in the right spot for the liquidity. Basically, liquidity is shifted to the right spot, and basically you can basically market make from outside and give some refuel this, and then it's always in the sweet spot of the trading. And this is this is very technical now. But business-wise, this opens like a new perspective on AMMs basically, because until now, if you have been liquidity provider, you always have been eating the impermanence yourself, and there was no way around it. This was the reason basically you have always to guard your positions and be sure you're in the right range to make profit in the trading range. And now, because there's like a separation of these two things, one is basically inside and one is basically taken outside, it's also separation of responsibility basically. And what we hope that it will open up that now if you liquidity provide, you don't have the risk of the impermanent loss anymore. So you can just chill basically. You can deploy liquidity, and basically somebody else will take care of the impermanent loss. This is one of the benefits. It has other benefits, and the biggest benefit is you're always in the range where the trading is happening. Because with Uniswap V3, if you're outside your range, you have to reset your position. You have to do it really, withdraw liquidity and resubmit your liquidity on another place. And now it's done for you, basically.
Thanks a lot for the very detailed explanation. Do you think it would be fair to say that, like with the refuel mechanism, basically LPs will have a lot less active management and maybe more predictable returns?
Yeah, there are two. That the benefit of this is first, you don't have to manage your position as an LP, which you didn't have to before. On Curve, you don't have to manage your position either, as in StableSwap not. But you also are always in the AMM will always be in the place where the density or the liquidity is needed, basically. So And this is also a good offer for, this is also why curve shines. Many times curve shine, in general curve shine in kind of like shock scenario, because what we did see last time with staked ETH, wrapped staked ETH slash ETH, there was like a DPEG basically. And then all the liquidity on concentrated liquidity where people have to manage liquidity yourself is suddenly outside of range. And every time, basically, curve is the last is the place of last resort for trading, and this is also for FXSwap. So if there's like a jump in the price, FXSwap will always be in the sweet spot of the trading. So you make long term, you make more revenue on this, because as soon as you're outside, you don't make any fees basically as a LP basically.
Okay, yeah, that makes sense. And maybe just to kind of tie it up with, like you noticed, you mentioned before Llamalend, and I covered Llamalend several times before, and especially its soft liquidation mechanism. Do you think there are any similarities between that and Refuel? Or maybe since like FX is more of a low volatility thing, the soft liquidation isn't needed as much?
I think they're really different products at the end. It's like, yeah, in a way, yes. It's interesting thinking basically. If you can, yeah, but it's like, yeah, maybe the next iteration. No, they're different products, I would say basically, but
Okay.
in a way, because liquidation protection, as we call it now, is much more close to the Uniswap V3 world, in the sense that you have like bands of liquidity which are filled basically. So no, it's like there are different worlds basically. It's not like, but just as you touch Llamalend, we're going to work on a new iteration basically. So also for Llamalend, and it will be out soon. So it's like, but it's more like take the experience and iterate on this, as we did now with FXSwap, and soft protection will be the same, but we will polish, mostly do things over the interface, that it's more clear what people have to do and how they have to interact with this.
Okay, perfect. Thanks a lot. And okay, so I guess maybe let's focus back to FXSwap. So besides like stable coins, especially non-USD ones, what other real-world assets, maybe like gold or tokenized bonds, do you see as a natural fit, I guess, for FXSwap? Or if there are any?
I think we on-chain people say low liquidity, but in fact, this is just because we are used to this crazy and low volatility. Sorry, it's just because we are used to this crazy volatility on chain. But most of the assets outside of on-chain trading and like exotic tokens are low volatility, basically. And I think everything is low volatile. I don't have exact number, but if it doesn't deviate more than 5% a day or 10% a day, it's low volatile for us, because we did see like other things for many coins, have jumped like 50% a day and these kind of things. So yeah, so it's very suitable for all assets who are like not on chain, because all of them, maybe except there's some long tail, per se, how they call it, like penny stocks basically, which also
Okay.
have these jumps,
Okay, yeah,
but
yeah.
that's not the target, basically.
Of course, yeah, true. Like a 5%, 5% like daily movement outside the world of crypto isn't that common,
Yes,
obviously.
basically. And also, it's just a measure of scale. FXSwap allows basically the refuel. You can refuel as much as you want. So if you have more volatility, basically you have to, somehow somebody has to pay for this volatility, basically. And with FXSwap, it's like refuel from outside. So it's not that you can say, this works, this doesn't work. It's just that if it's a low volatile pair, the cost of doing this is cheaper, basically. So it depends on the profile of the asset issue, or how much, how much, how how good it works. Basically, it's not that we can say it's black and white. It depends.
Yeah, that makes sense. And do you think FX swap sort of would in a way compete with, I guess, more centralized FX desk sending changes? Or maybe it's more of a complementary thing that it would kind of maybe help them bring them into DeFi, or maybe neither of them?
I think there's many can look at this in many ways. But we talk to non-dollar stable coins, and we also think about like gold pools and these kind of things. So basically, there's a legal arbitrage in this, honestly. And what we see, we talk to some of the asset issuers, and it's interesting insight for myself, basically. If you are a European regulated bank, the only non-dollar stable, if you hold a stable coin, it has to be MiCA regulated, basically. So this means as soon as you get the stable coin from, I don't know, someplace where it exists, non-dollar stable, not euro, but if it's like a LATAM stablecoin or one of Asia or something, as soon as you hold it on a balance sheet, it has to be MiCA compliant. And I did see many times that now the business case is a little bit like this, that you say, okay, we have the banking, we mint our own stablecoin. Basically, it's minted, somebody sends money to a bank account, then you mint your stablecoin, and then you use FXSwap to exchange it to the other stablecoin. And then you do reverse, in the other country, as you off basically off board from on chain, you do the reverse. So basically you go the way back, you then have the LATAM whatever coin, and then you go to the local banking system. And it's very powerful also business wise, because this means you just cut out all the middlemen first, and secondary, if you're able to have the liquidity on chain, you suddenly don't have the regulatory issue anymore, because you never hold the like non-MiCA compliant stablecoin in your books, basically. So yeah, there are many interesting things in this. Not only that, if you compare like order book to continuous like AMM, this is one part. But I think the other part is that, of course, if you're able to have a very deep pool in some of the like most traded asset like USD or Euro, and you have a very deep liquidity in such a pool, you will have very low slippage, basically. And this is, basically that's our bet, because then you have instant settlement, you have very low slippage, you have the regulatory issue basically does not exist anymore, because you just do your trade and offboard somewhere else. So it unlocks a lot of opportunity for us.
Yeah, that's very interesting. Thanks. And okay, so maybe moving outside of FX a little bit, I wanted to ask you a question about the TVL. So like, I remember during 2021, Curve was like one of the undisputed TVL leaders. And right now, overall, the TVL curve is lower, even though obviously TVL isn't the like end all of everything DeFi related. But in Llamalend, for example, I didn't check the numbers today, but I think it's at an all-time high. But I guess, do you believe that FX swap will help Curve attract more liquidity and potentially boost TVL, or is that something that you're not particularly focused on right now?
Yeah, there are two answers to this. The first, Curve has been a high success back then, and like one of the only venues. And the tokenomics worked very well in the regard that it pushed TVL very, very high, basically. I guess that's what, in a way, and that's the intention of it. It has been the intention to attract a lot of liquidity, and the tokenomics have been structured to do this, and it worked very well. And now, it's not the same situation. There's much more competition, basically. And the other thing to look at this, of course, you see, I don't blame anything, but anybody, but you see people telling, now we have this kind of billions of TVL basically. But in a way, yeah, it's just that because the market is going up, because of course, if you have a lot of Bitcoin, a lot of ETH in your pools, and we have also this kind of pools, but part of it is really stable swap. I don't have numbers. So of course, if you have a lot of unstable, like crypto assets, and the market is going up, the TVL in dollar price is going up heavily. So it's a little bit, it's not. I think it's legit, go around and say, yeah, that's a TVL. It did grow a lot, but part of it is that as we are like a stablecoin focused business, this TVL is not like, going through the roof or like make fourfold like other assets do. Basically, that's one of the reasons TVL is not comparable.
But it probably won't be as volatile in a bear market, right? Sorry, I interrupted you, because like obviously it's stable, so it doesn't go up and down.
Yeah, the same. Basically it's more sticky. On the lending market, what we had, it's not this is why we do a new iteration. Basically, the lending market has been permissionless, but the lending market, if you compare this, if you say how much TVL it has, and maybe it's low right now or not, it could be higher, basically. But if you look at the lending market, it's a much more complex product. This means, if you open a pool, you can do wrong things, but more or less it's safe just to take with default, and then you have your pools. But lending market, that's a more complex product, and this is also the reason why we didn't work too much to get it into growth, basically. And now, as we have a new iteration who has like it has basically we have now in the future version borrow caps. And this means we can manage the risk in the lending markets better, basically. And lending markets are also reputation-wise, the perception is different. We had some lending markets, which this is outside of our control, created bad debt because of the volatility of the asset and the market. And then, it somehow, it reflects back our brand value. And so we have to be very cautious with lending markets, basically. But now in the new iteration, we work also like on having basically risks, more automatic risk checks, and then hopefully we can open much more markets than we did now with much more assets.
Awesome. Thanks for that. Okay, then maybe just to tie things up, since we're reaching the end, if I guess there was like one message that you would like for people that see this, whether they're like LPs or traders or builders, to take away from FXSwap, what would that be?
Yeah, I would just say, basically, or point to the fact that Curve is some kind of innovation leader, and still is, basically. We found a new way in doing this, and we will also, if we see things which can be made better, we will have a new iteration, and this will be the same for this swap. So it's like, even I think, it's pretty good, and maybe it's the end of this, but what we have proven many times, that we are like innovation leader. And if you look at, if you have a decision where you basically you go with which kind of protocol you go with, it's always good to build on the innovation leader, basically. And the main reason is then you can take your learnings, and if there's a new iteration, you can profit from your understanding of the system, and we profit and you profit too. And I think we will keep shipping new things, and that's basically the sales pitch. And FXSwap, I'm pretty bullish on this, basically, because it solves many things which until now has not been solved. And
Yeah, that makes sense. Okay, then Martin, thanks a lot for taking the time to have the interview with us. And
thank you very much for having me.
I wish you a great day, and also a lot of success in the future with both FXSwap and Curve.
Thanks.